The Huawei ban was recently announced by the Trump administration, and because of this, there's a lot of consequences that you should be aware of as an investor. This ban essentially blacklists Huawei, and as a result, a lot of American companies have suspended any sort of operations or interactions with Huawei until further notice. The first big one was Google, which came out and said that they will not be working with Huawei anymore on Android and will cut access to Google services like the Play Store, for example, which is critical for Android users. Then after this, we saw a flood of other tech companies come out and say the same thing, that they're going to be suspending operations with Huawei. A lot of them being chip makers, but not all of them are in the semiconductor space. Some are even other large tech giants. So in this video, what I want to do is go over 5 companies that will actually be affected directly because of the Huawei ban, and that's because they do business with Huawei directly. But one thing to keep in mind is that the actual list of companies that will be affected by this will be much larger than the 5 companies we're going to talk about today. And with the list that we have today, you may recognize a couple on the list. Most of them you probably won't recognize because some of them are actually pretty small companies. But I can guarantee there's at least one company on here that most of you will be aware of or even hold right now in your portfolio. So anyways, let's get into it. The first company here that will be affected the greatest really from this Huawei ban will be NeoPhotonics Corp. So this is a small cap company with around $200 million market cap. They're a semiconductor play and they have almost half of their revenue come directly from Huawei. The stock price reflects this as it corrected around 50% in recent weeks following the news from the Trump administration. And this could really be detrimental to a company like this, but luckily, since it's such a small market cap, many of you watching are not going to be directly exposed to this company. So let's move on to our second company here. The second company is Lumentum Holdings. So Lumentum Holdings is a bigger company compared to our first pick here, and currently sits around $3.5 billion in market cap. So this is actually a company that I've come across in my research when looking at semiconductor stocks personally. They get close to 20% of their revenue from Huawei, so not as detrimental to their business as our last stock, but still a huge segment nonetheless. From its peak earlier in May, the stock is down around 30%, again pricing in this bad news as well. Remember, stocks are forward looking, so they're pricing in the kind of worst case scenario based on the news that we have right now. So that's why you see a lot of these stocks already correct, even though this ban could potentially be lifted in the future. Number 3 is Infi Corp. So this is a company that I actually have not come across before, sitting at around a $2 billion market cap, and it's a fairly small company with around 600 employees, but they have around 14% of their revenue coming directly from Huawei. As a result, the stock price did correct like the others, not as drastically, but still suffered a 25% correction in a matter of weeks. This just goes to show you how significant a ban can be for companies if it doesn't get lifted in the coming months, unfortunately. So number 4 is a company called Qorvo. I hope I'm pronouncing that right. So this company here is actually on the list with a $7 billion market cap, and they rely on Huawei for 13% of their revenue overall. So as a result, as you would expect, the stock did get hit as well as the other stocks, and it corrected over 25% from its highs. And unfortunately, this leads us to our 5th pick, which is one that most of you guys have heard of before. So number 5 on this list is a fan favorite. It was a really popular stock last year and the year before, and that's Micron Technologies. Now this is one I'm sure a lot of you own, and they actually bring in around 13% of their revenue directly from Huawei. The stock as a result also corrected 25% from its highs in May, but overall the stock has just been getting rocked left, right, and center for the last year. There has also been articles released stating that former employees from Micron stole their IP in China and are using it to essentially replicate what Micron has done. Thus, this removes a reliance on Micron from some Chinese companies, including Huawei possibly, which of course will affect Micron in the long run because they will have less revenue coming in from these Chinese companies. But now with the direct ban, that's going to affect them even more, and we could see Micron hitting new 52-week lows in the near future. So all in all, this is really bad news for semiconductor stocks, and this is just the tip of the iceberg in my opinion. Many more companies, including popular ones like Nvidia, AMD, Qualcomm, Xilinx, Broadcom will also get affected because of this ban. In fact, I recently read an article stating that AMD, Intel, and Nvidia could lose a combined $140 million to the US Huawei ban, with AMD getting hit the worst. AMD has around 2% of its revenue come from Huawei, whereas Nvidia has around 1% of its revenue, And Intel, because they're so large, will lose a smaller percentage amount, but on the flip side, because they're so large, they're also going to lose a larger dollar amount here, coming in at around $83 million in loss, potentially from this ban. And it doesn't stop there, unfortunately. Other massive companies that I'm sure a lot of you guys are holding will also get hit from this, including Microsoft, Qualcomm, like I said, Broadcom, Western Digital, and Texas Instruments are also on the list here. So clearly you can see that this ban on Huawei will not only hurt Huawei and Chinese companies and possibly the Chinese economy, but it will also directly affect a lot of American companies. Specifically American companies that do business in China, specifically even more companies that do business with Huawei. But the real threat here isn't just the direct Huawei ban, it's the potential of this becoming something much, much larger. For example, what if the Chinese government decides to combat this and alternatively decides to ban iPhones in China? This of course will directly affect Apple, and we could see Apple stock possibly in the 150s again in the blink of an eye, because they get a good chunk of their revenue from China. They also rely on China to continue growing, and the company has been struggling recently because of Chinese weakness. So if that happens, it would be detrimental for Apple stock, at least for the short term. But it doesn't stop there. If Apple stock gets hit, it brings down the whole market because it's such a large company, and as a result the stock market will get hit and we could enter some sort of bear market or recession. But the question is, will it ever get to this state? I don't really know the answer to that. I don't think anyone really knows the answer to that, but what I can do is hope that they come to an agreement, the US and China, figure out some sort of deal here and come to an agreement that they're both happy with. But if things keep getting worse, if things keep escalating, we could be in for another correction, which could potentially be worse than the one that we saw back in December. So what I would do is brace myself and position myself accordingly, deleverage if you are over leveraged to the market right now, and have a lot sitting in cash right now. And the reason I say this is because this time, if we do enter a correction, it'll be because companies' earnings will get directly affected from this ban or this whole tariff thing. And we can already see that with a lot of companies. They're already kind of slowing down their growth, some revenues are declining, all because of Chinese weakness. And if this gets worse, that's going to just make those earnings worse. And if the earnings get worse, companies are going to have to go out and reduce their forecast, reduce their guidance. And if that happens, it's going to look bad for the stocks. People are going to start selling the stocks, and it's just kind of a tumble downhill from there. But right now, guys, it's not all doom and gloom. There's a lot of bad news being priced in, and we're seeing that right now in a lot of these stock prices. So unless we see an escalation on another level here, some really big news comes out which no one was expecting, which is in the negative side, I think that we should be okay. We probably will kind of continue moving sideways, maybe slightly lower, until we see kind of progress in this trade resolution. I've personally reduced my exposure to direct Chinese companies over the last year or so. So I'm not saying that you guys should. I'm not a financial advisor, but that's just how I'm positioning myself here. I also have a lot sitting in cash because I do think that there may be good opportunities coming in the near future. So thanks for watching, guys. If you want to see more coverage like this, want to see more videos like this, make sure to comment it down below and let me know. Drop a huge like if you enjoyed it. Hit that subscribe button with the bell notification so you don't miss any new videos from me. Thank you for watching. Don't forget to invest positive, and I'll see you in the next one.